Hey there, future real estate moguls. Are you ready to dive into the exciting world of real estate investment? Well, you're in the right place because today we've got something special lined up for you. We're going to unlock the secrets of real estate investing and share 7 unbelievable tips for beginners to get you started on the journey to financial freedom. So stick around because you won't want to miss this. Real estate investment might seem like a daunting endeavor, but it doesn't have to be. Whether you're looking to generate monthly cash flow or build long-term wealth, real estate can be an excellent avenue for investment. In this video, we'll break down the basics of real estate investing and provide you with 7 valuable tips to get started on the right foot. At its core, real estate investing is a way to grow your wealth in a manner that often outpaces the effects of inflation. While your regular job provides income, real estate investments can offer appreciation and income simultaneously. Before we dive into the tips, let's first understand why investing in real estate is a smart move. While there are many reasons, 2 motivations are cash flow and second, wealth building. 8 benefits of real estate investing. Benefit number 1 of 8, steady cash flow. Real estate can provide a consistent stream of rental income, offering financial stability and covering ongoing expenses. Benefit number 2 of 8, long-term wealth building. Over time, real estate properties tend to appreciate in value, allowing investors to build substantial equity and long-term wealth. According to the Federal Housing Finance Agency (FHFA), the average U.S. home value has increased at an annual rate of 4.3% since 1991. Notably, in areas like San Francisco, median home values have surged by an annual rate of 10.5% since 1991. For instance, $200,000 investment in a home in 1991 would have appreciated to over $600,000 by 2023. Real estate investors can build equity as they make mortgage payments. For example, a buyer will purchase a $200,000 home with a 20% down payment would accumulate $160,000 in equity after 20% of their mortgage payment. This equity can be leveraged for other investments or financial goals. Location. With properties near schools, jobs, and amenities tending to appreciate faster. Demand, where high demand relative to supply drives up prices. Supply, with limited availability often leading to price increases. Economic conditions as periods of growth generally boost real estate prices. The Case-Shiller U.S. National Home Price Index reveals a historical annual appreciation rate of approximately 3 to 5% for residential real estate in the U.S. The Federal Reserve's survey of consumer finances underscores that most Americans accumulate significant wealth through home equity, which appreciates over time. Data from the National Council of Real Estate Investment Fiduciaries (NCREIF) demonstrates that commercial real estate investments have consistently delivered robust returns, often surpassing stocks and bonds. Rental income from residential properties in the U.S. surpassed $500 billion in 2019, providing a reliable source of cash flow. Homeowners can amass substantial equity over time through mortgage payment and property value appreciation. The Joint Center for Housing Studies of Harvard University reports a median increase of $40,000 in home owner equity from 2013 to 2018. Benefit number 3 of 8, diversification. Real estate investments can diversify your portfolio, reducing risk by spreading your assets across different asset classes. Benefit number 4 of 8, tax advantages. Real estate investors can benefit from various tax deductions such as mortgage interest and property depreciation, which can reduce their overall tax liability. Benefit number 5 of 8, tangible assets. Unlike some other investment, real estate provides a tangible asset that you can see and touch, adding a sense of security. Benefit number 6 of 8, inflation edge. Real estate often keeps pace with or outpaces inflation, preserving your purchasing power over time. Benefit 7 of 8, control. Real estate investments offer a level of control, allowing you to make decisions about property management, improvement, and rental terms. Benefit number 8 of 8, passive income. When managed properly, rental properties can generate passive income, allowing you to earn money without actively working for it. Real estate offers a unique combination of stability and profit potential that makes it appealing to both seasoned investors and beginners alike. So here are 7 types of real estate investments. Now, let's explore the different types of real estate investments you can consider. Real estate investment type number 1 of 7, buy and hold. This strategy involves purchasing properties for the purpose of generating monthly cash flow and building equity over time. Real estate investment type number 2 of 7, flipping. Flipping is all about buying distressed properties, renovating them, and selling them for a profit within a relatively short time frame, typically 6 months to a year. Real estate investment type number 3 of 7, wholesaling. As a wholesaler, you'll identify great real estate deals and pass them on to investors who have the resources to acquire them, earning a fee for your efforts. Real estate investment type number 4 of 7, real estate investment trust. We call them the REITs. These are companies that own, operate, and finance income-producing real estate. Investing in REITs allows you to own a share of various real estate properties without directly owning them. Real estate investment type number 5 of 7, house hacking. This strategy involves purchasing a multi-family home, living in one of the units, and renting out the others to cover your living expenses. Real estate investment type number 6 of 7, short-term rentals. With platforms like Airbnb, you can profit from renting out your property on a short-term basis to travelers and tourists. Real estate investment type 7 of 7, creative financing. This category includes various creative methods like lease options and seller financing to acquire real estate without a traditional mortgage. Finding the right investment property is crucial. You want to consider factors like location, property condition, market trends, and potential for future growth. Local real estate agents and online resources can be valuable tools in your search, but in this time and age, AI and data-driven platforms such as www.empirebigdata.com makes it super simple to access and analyze all these factors in one click. Financing your real estate investment can be done through various means. This includes traditional mortgages, hard money loans, private investors, and even your own savings. Conventionally, mortgages and cash might be your first thought of a funding source, but there are many other creative options that we will continue to discuss. Managing a rental property involves handling tenants, maintenance, and finances. You can choose to do this yourself or hire a property management company to handle this task for you. When you do get to this level, it's better to structure the cost of property management into your deals. Profits in real estate can come from rental income, property appreciation, and strategic buying and selling. It's important to have a clear plan and understand how your chosen investment strategy generates income. Different strategies from real estate investing suit different goals. Evaluate your objectives and risk tolerance to determine which approach aligns best with your financial aspirations. Finally, here are 7 tips to guide you on your real estate investment journey. Tip number 1 of 7, do your research. Knowledge is power in real estate. Take the time to learn about the market, property types, and investment strategies before jumping in. Tip number 2 of 7, exit before entry. Have a clear exit strategy in place before making an investment. Knowing how you'll profit or mitigate losses is essential. Tip number 3 of 7, learn how to find deals. Understanding how to identify great deals is a skill that can set you up for success. Networking, online listings, and real estate clubs can be helpful resources. And again, AI and data-driven platforms such as www.empirebigdata.com makes it super simple to access and analyze all these factors in one click. Tip number 4 of 7, learn how to fund deals. Explore various financing options and understand the pros and cons of each. Being well financed is crucial for your real estate ventures. Tip number 5 of 7, real estate agents are overrated. While real estate agents can be helpful, they aren't always necessary. Essentially, especially in this age of online listings, don't hesitate to explore properties independently. Tip number 6 of 7, be patient. Real estate investments may take time to yield significant returns. Avoid impulsive decisions and focus on the long-term gains. Tip number 7 of 7, don't overextend yourself. Avoid over leveraging or investing beyond your means. Responsible financial management is key to a successful real estate journey. Saving such people was responsible for my first fleet of real estate success. For my first fleet of real estate success I enjoyed as a beginner in my first 3 years. Real estate investment offers substantial rewards such as generating income, building wealth, and providing an edge against inflation. However, it also carries risk that must be carefully managed. Education and experience are your allies in navigating the world of real estate investing. Now, here's your mission. Hit the like, share, and subscribe button in order to be notified of the next video. I've got a burning question for you. Have you dipped your toes into the world of real estate yet? What phase are you in? Beginner, intermediate, or how many deals have you done? Would love to hear from you. Drop a comment down below and let's start a conversation. Your insights could be the inspiration someone needs to kickstart their own real estate journey. If you got value from this video, you would definitely like the one that just popped up on the screen. Join me on the next video.